In this video we are going to see question number 18 from hire purchase and installment purchase system. Okay, so house of accounts is the channel name. So this is the channel through where I'm distributing the education. Okay, so let's zoom it to know the to see clear the question. Okay, so here is a clear view, so it's viewable and plus readable also. So let's start the question number 18 directly. Abhishek Company Limited has a hire purchase department. Okay, Abhishek Limited is a hire vendor. He has a department, hire purchase departments. Okay, so goods are sold on hire purchase at cost plus 50%, means 50% are added from the following particular asset in the profit or losses made by the company. 2005 1st January goods out on hire purchase at hire purchase price. So goods sale means goods sold or sent on, like, so 60% is the goods out on hire purchase. Okay, goods sold on hire purchase during the year at hire purchase price is 3,24,000. Okay, this is the during the year. Cash received during the year 2,24,000. Good received back means return, hire purchase, installment unpaid how much? 16,000. Okay, so 2,000 is the return back. Goods with hire purchase customer at hire purchase price at the end, that is the 1st January entry. Opening is 60,000, closing stock is 20,000. First what we have to do, first we have to prepare hire purchase trading account. Okay, if this type of question is giving, so we have to change the format of hire purchase trading. So this is the hire purchase trading account. Okay, debit is expenses, credit is a income. Say here opening stock of goods how much? 60%. So whatever the expenses we have to write debit and income is a credit. So to hire purchase stock, how much opening stock is? 60,000. Now goods sold on hire purchase. Okay, here you can see 3,24,000 goods sold on hire purchase. Okay, goods sold on hire purchase how much? 3,24,000, and it is cost plus already. So now how much we have received from customers? 2,24,000 we have received from customers. So write 2,24,000. The next entry is installment due. How much due? Before due, see there is a return back. Okay, the 2,000 of rupees is a return back. So installment in this question we don't have any due, so goods return back. Okay, so goods return also you can write, or return back. So how much? This is the goods return is a 2,000. Now go for hire purchase stock, that is a closing stock. Okay, the closing stock is, you can see here, goods at the end how much with the customer is 1,20,000. Okay, so right here by hire purchase stock 1,20,000. Now okay, now here we have to receive we have to write the stock reserves entry, means we have to separate cost plus or above cost, whatever it is. So we have to separate this entry. Okay, we have to separate this amount from original amount. So opening stock and goods sold will be opposite side, and the closing stock will be opposite side, means opening opening and goods are debits, so we have to write cost plus entries, stock reserve entries opposite side. Okay, means whatever amount sent from the office, the extra 50% is added to original amount. So how much? 50% is extra added, means the overall amount is 150% of value. Means for example per unit value is 150 rupees. Earlier it was 100 rupees, so extra 50 rupees is added. So we have to calculate 50 rupees, whatever it is, 50% amount is a separate. For example, hire purchase stock how much? 60,000 is the hire purchase, so it is extra amount opening stock. So 60,000 into 50 divided by 150, how much we are getting? let's see, 60,000 into 50 divided by 150, we are getting 20% extra, means overall 60,000 is the 150 amount. So 20 means 320 is the 150. Okay, now 3,24,000. So this 3,24,000 is 50% added in this amount. So 3,24,000 into 50 divided by 150. Okay, so how much we are getting? 1,08,000 we are getting. Okay, so 1,08,000. Now closing stock. Closing stock is 1,20,000. So this 1,20,000 is the total overall value of 150. So now we have to separate a 50%. So 1,20,000 into 50 divided by 150. So we are getting 40,000. So income is always extra, expense is always less. So let's add all. 2,24,000, 2,000 plus 1,20,000 plus 20,000 plus 1,08,000. Okay, so how much we are getting? It's 4,74,000. Okay, see, because goods with customer, this is yeah, okay, 3,24,000 only. So okay, so here installment due at the end of year, how much we have to installment due at the end of year is 24,000. Profit is 74,000. Okay, so installment due at the end of year is 24,000 showing, means we have not yet prepared installment due account. So first we have to prepare installment due account, then we have to prepare trading account. Okay, so the installment due entries we have to transfer into trading account. So let's start, let's prepare installment due account. Okay, so we have the entry for installments. Opening is 60, goods sold, and closing stock also there, return back also there. Okay, so first we have to prepare installment due account. So okay, this one is from an earlier question, so let's read this old information. Okay, alright, now we have to prepare installment due. First, opening stock of hire purchase, how much? 60,000. Goods sold, how much? 3,24,000. Two goods sold. So here we have to receive cash, 2,24,000 cash receive, and closing stock is 1,20,000. Okay, here one more entry is goods return. How much? Okay, this is our cash receive. Here installment okay, closing stock is also given here. So what we have to, okay, this is the opening, closing, and cash receive entries is there. Okay, so now one more entry we have to add, return entry, because we have returned some amount to vendor, and that is okay, right, 16,000. Why we are writing here is a 16,000 but not 2,000, means overall 16,000 we have lost, but according to trading that is 2,000 per vendor, but we have lost total overall 16,000. Okay, now right here 3,84,000. Okay, all debit amount is 3,84,000. now less this 3,84,000 directly. Okay, let's see on calculator, I'll show you. 3,84,000 minus 2,24,000. Okay, So minus 2,24,000 minus 16,000 minus, and again how much this one? Okay, 1,20,000. Let's wait. 3,84,000 minus 2,24,000 minus 1,20,000, again minus 16,000. So the overall amount 24,000. So how much we are getting? We are getting 24,000 amount is due from customers. So this 20,000 is transferred to trading account. The overall, okay, write the ledger balance 3,84,000. So this 24,000 transfer here. Write installment due. Okay, so we have already deleted this entry. So you can write here by installment due or interest due. You can also say interest due or installment due. Okay, so okay, let's transfer this. Okay. So here 24,000, how much we have to receive? 24,000. Okay, now add all the credit amount, income amount. 2,24,000 plus 2,000 plus 24,000 plus 120 plus 20 plus 1,08,000. So the overall amount we are getting 5,02,000. Let's calculate on place. You can see 2,24,000 plus 2,000 plus 24,000 plus 1,20,000 plus 20,000 plus 1,08,000. Okay, plus 1,08,000. So overall 4,98,000. We're getting how much? 4,98,000. Okay, so we have transferred. Okay, so we have transferred completely. So okay, let's see once more. 4,98,000. After adding all the credit, we are getting 4,98,000. Debit is 3,24,000 and debit is 60 and 40, means overall 4,24,000. This is 4,98,000 we are getting. That is 4,24,000. So by mistake 5 lakh I have written here. So let's see, 4,98,000. Here also 4,98,000. But first we have to deduct these amounts. 4,98,000 minus 60,000 minus 3,24,000 minus 40,000. Okay, the remaining amount is 74,000. These 74,000 is our profit. 74,000 is a trading profit. The overall, write the ledger balance 4,98,000. Okay, the ledger should always be tally. This is how we have to prepare a trading account. Remember, always do interest account, interest due account, or installment due. We can also say installment due account. Okay, this is the question number 18. This is the way to solve the question number 18 from hire purchase and installment purchase. Thank you from House of Accounts tutorials video.